Guys, it's Jeffrey back with another video, and today is going to be a weekly analysis video. And basically I do these once a week, and I just kind of give an overview of the week ahead of what I'm looking at in the charts. So we'll basically break down the pairs that I'm looking at, start from a higher time frame and break them down to a lower time frame. So if that little red button below this video is still red, make sure to hit the subscribe button and it'll turn gray. That way you're notified every time I post a video. And basically I post daily videos related to Forex training, education, and also my daily and weekly analysis. So with that being said, let's go ahead and jump right into the charts. So I always start with the dollar index. And the reason I start with the dollar index is because I start with the dollar index because I trade only the majors. So all of the majors are paired with the US dollar. So whether that be Euro dollar, GBPUSD, all of that, I always look and reference the dollar index first to see what direction I think the dollar is going to go in order to help basically give me a better idea for the pair that I'm trading. So if we look at the monthly chart on the dollar index, last month we traded down and we've closed up here. So to some people this may indicate that a low has been formed and that it's going to want to go higher, but I do still see weaker prices on the dollar index. So what I see basically that unfolded last month is if you take this whole move right here, this is classified again as an ICT bearish order block. And if you haven't watched any of my other videos where I explain a bearish or bullish order block, basically my mentor ICT Inner Circle Trader classifies this an up candle, but if they're close to each other, then you can basically take both up candles, and if they're broken, so meaning these up candles are broken with down candles, and we have a down candle that closes below the up candles, that would classify it as a ICT bearish order block. So that basically is a level of resistance. So if the market trades up into there, we should see it hold as resistance and then trade lower. So we didn't quite come up into the low of this candle. I'm going to take this box off now that you guys know what I'm looking at here. But we didn't quite come up into the low. We just failed. But I see this as a potential high and the market wanting to trade lower. A lot of times the market makers will take this type of candle, this like wick, and basically a lot of people think it's a low forming in the marketplace when in reality it's just a fake low, and then ultimately they take price lower. So the next objectives for the downside on the dollar index that I'm looking for are going to be this low. So that comes in at 88.25. Alright, so if we break below this low, then that's a confirmation that we're definitely going to go lower on the dollar index. But since we had these highs right here and then the market rallied up and took those highs out, once we broke below here, I consider this low a break in market structure. So if we look at this candle here, this was previous support. We know it was support because it traded down, acted as support, traded down again, acted as support, came back, broke through it, traded up into it, acted as resistance. So that's just a form of old resistance, old support now turned resistance. So this level, since it broke through it and held, that confirms to me that we're in a bearish trend now. So we've got a high, a low, lower high, lower low. So we should expect a lower high to form. This could be that lower high that formed last month, or we could get it to trade a little bit higher. We'll just see how this first week of the month starts unfolding. So let's go ahead and drop down into a daily time frame, and there's going to be a lot of mess on here, so I'll just hide that for now. So we're all the way back up into this candle here, which is also an ICT bearish order block. Again, it's an up candle before a down move, classified as an ICT bearish order block, which is a level of resistance. You can see that price is starting to hold there now and starting to turn. So if it does hold and continue to trade lower, that's good. That indicates, we're correct in the direction that we think price is going to go. But just keep in mind we could trade, right back up here, form a wick, and then ultimately trade lower. At the moment, I don't see that unfolding, but we'll just have to see what we get going into the week. So I'm going to drop down to an hourly time frame, and I want to talk about this because this is what I had mentioned, and I believe it was Thursday's video last week. I was looking at dollar index, and I said if we break above this high, then I'd look for a retest, and we would basically then shift our bias to longs. So instead of looking for shorts in the dollar index, we'd be looking for longs on the retest of this level here, which would have been a market structure break. Well, we came above it, and then we immediately traded lower. So we're still holding this range in between this low and this high here. So until we get a clear breakout, either this way or here, we don't really have confirmation on the direction that we're going to go. At least I don't have confirmation. So I'm going to sit out until I get one of these ranges taken out. So whether it's this one, then we'll be looking for longs, or if it breaks down, we're going to be looking for shorts. So we'll see what we get, but I just wanted to point out that, the market can trade up here just like this, but if we don't get a clean break above it and a retest of it, then it's not a breakout of the range. It's not a break in market structure. This isn't a break in market structure. Okay, we need a clear break through it. So if it breaks through like this, then retest, this is a break in market structure. But we never got that break above it. So it could come back up and break above here and give us the break in market structure, then retest. But at the moment, we haven't got that. It's looking to me like it wants to continue down some more. All right, so let's look at the majors real quick and see what we got for the week. All right, so for euro dollar on a monthly time frame, I'm still looking for that 1.25 level. And if you look, last month we basically have inverse. So the way that the majors work, anything with the dollar and the second part of the pair. So if it's EURUSD, GBPUSD, that means that it's going to act inversely to the dollar index. So if the dollar index is moving up, EURUSD is going to be moving down. So we have the dollar, we expect the dollar to be continuing lower, right? So that would mean higher prices for euro dollar. So last month we made the same low here that we made in the dollar index that was a high. So if you look at it, I mean, it's almost identical. So since we had a bullish close like this, again, I am expecting higher prices, and the past 5 weeks, we've been in a range for really basically 12 weeks. So the market is bound to move soon. We don't know if that's going to be this week or next week, but the market should start moving soon because we've had really small bodied candles. And anytime we have small bodied weekly or daily candles, we expect big movements. So if you go back and look at that in your chart, zoom out. Small body, small body, small body, small body, small body, big body, small body, big body. So that's exactly what we're seeing here. It's just consolidating. So we're still expecting higher prices. If we look at the daily chart, we got a low, a high, higher low, higher high. Okay? So this confirms bullish market structure. Now where are we? Forming a potential higher low. As long as we don't break below this low, we're still in a bullish market. So what are we expecting now? A higher high to form. So that's what I'm looking for in euro dollar. Higher prices to take out this 1.25 level, which would be about 190 pips from where we're at now. And ultimately, I see it going higher than that, taking out this high above here, which comes in at 125.55. So 1.25 is just my first objective. So, and I'll keep you guys updated in the Signal group for any trades that I'm looking to take, but I'm just typically let Sunday and Monday unfold to get a clearer read on the markets. And if you're not a part of the Signal group, make sure to click the link in the description. It'll basically take you to Telegram, and Telegram is just a platform that I use to communicate all my trade signals and anything educational or teaching purposes that I may see throughout the week in the markets. So if you're not a part of that, make sure to go ahead and join. It's completely free. So higher prices in euro dollar. In terms of getting on board this for a long, I'm watching this gray box here on the hourly time frame. If we break below it, it's probably going to want to trade a little bit lower Sunday and Monday. But I'd like to see this hold and be the potential low of the week, because we've already had this move down here, which took out the stops that were here. So to me, that looks like a good potential low in place, but I'd like to see this hold, because we got the low, high, higher low, higher high, higher low, higher high. So I'd like to see higher low form here and not break below this. So we'll see what we get between today and tomorrow. And like I said, I'll keep you guys updated in the Telegram group. So let's look at GBPUSD. Expecting higher prices in this as well, because we are expecting lower prices in dollar index. So again, this is going to be inverse of dollar index. So on a monthly time frame, basically we have the same pattern that formed on euro and on the dollar index. So let's just get a clearer read on this. If we look at this down candle before this push up, this is an ICT bullish order block, which is the opposite of a bearish order block. It's a down candle before a move up. So if we mark out candle, alright, so this should hold as support. We don't want to see it break below this low for higher prices. So looking at it on a daily time frame, I got this down candle before the push up marked out because this is a bullish order block as well, and you can see it's starting to hold as support. So we will see what we get with that. I like that we had a consolidation, push up, retested the consolidation, push up, retested the consolidation, push up. So we've broken down here. It could just be a retest of this order block. So that's what I'd like to see. I'd like to see this low hold and continued higher prices on GBPUSD. Yeah, ideally I'd like to see this low right here hold on a 4-hour time frame. So just say, yeah, it's 110 pips. And the only reason I'd place my stop loss below this low if I went long, hypothetically speaking right now, because we could get the market trading back below this low to clear out these stops and come into these down candles, which is an ICT bullish order block. So again, we'll have to see what we get over Sunday and Monday. I haven't talked about this in any of my videos yet, but I look at, oops, spilled some of my water. I use EURGBP to basically determine the direction of the major that I want to trade. So if you look at EURGBP, it's the euro against the British pound. So the crosses can help influence your direction on the majors. And what I mean by that is if EURGBP is going higher, then EURUSD would be a better buying opportunity than GBPUSD. And the reason of that is because EURGBP is moving higher, so that means euro is stronger than cable. And if we're expecting weaker prices in dollar, that would mean higher prices in euro. So looking at this chart, I'm expecting higher prices in EURGBP. So if we get that, that would mean euro is a better long than GBP. So that's kind of how I weigh my options of if I'm going to take EURUSD or GBPUSD. Again, another little trick that I learned from my mentor, ICT. So yeah, looking at this, I just wanted to talk about this, and then I don't trade this pair or anything. I just use it to confirm direction. So let me move this up here. And if you look, we were in this consolidation. So we got this range high, this range low. And basically we traded through it, made this wick, trade again, and then push back up. Once we traded lower right here, we formed this big ugly wick. All this did was just clear out the stops that were below all of these resting lows down here. So now I think since they've taken out this side of the range, they're more than likely going to want to trade back up higher and come back to test the range high. So we'll see what we get again, but I'm seeing higher prices in this. So Euro USD looks like a better buying opportunity to me than GBPUSD. And if you look at GBPUSD, it's had a stronger push up than looking at Euro USD, right? So if you look at Euro USD, it's just been consolidating, where we've had GBP rallying, and then we've had Euro GBP consolidating, but it's just taken out key levels of stops, and now it's pushing higher. So to me, that indicates stronger prices on Euro, on any Euro pair. So Euro USD. Again, if you're looking at like Euro JPY, then you need to look at USD JPY and Euro JPY. That's how I would weigh which one's a better trade. So I hope that was a good little insight if you didn't know that already, but that's how I determine what pair I'm going to choose. So the last pair that I want to talk about in this weekly review is USDCAD. I think this is going to be the biggest mover going forward in terms of pips for the month of April. So this is one that I'm going to be watching really closely to get on board for shorts. So this high that we made last month, I think, is now going to be a pretty influential high in the market. It traded up into this down candle before this push up, which is classified as a level of resistance. It's an ICT breaker. So I'll make a video later on talking about all of these ICT concepts that I use, but this ICT breaker is classified as a level of resistance, and we traded up into it and formed the high, which also took out a key level of stops. So now I think the market's going to be ready to go lower for USDCAD. So let me move myself down here now. All right. So anytime we see a strong push up like this and then immediate rejection, that usually just means a stop run. And like, okay, here, for example, we made a push down, strong push down, took out the stops, and then a strong push back up, and then they got out of there. That's what I'm expecting to happen with this. Now that they've basically taken, away from this high, I expect them to immediately start trading lower. So for a swing trade, and you classify a swing trade by framing your trade setup off of a higher time frame, so a weekly, monthly, anything like that. So if I went short right now at the market and placed my stop loss above here, it'd be 225 pips with a swing objective target of 650. So I'd be taking out this low here. Ultimately looking for this low down here to break, which would come in at probably about 1,000 pips, 825 pips. So if you look at that in terms of risk to reward, you got 200 pip risk, 600 or 800 pip reward. So 3 to 1, 4 to 1. That's a really good ratio for a swing trade. So that's a potential opportunity for a swing trade. I'm just waiting to get a tighter entry on this on a lower time frame. So looking at it on a daily, again, we're just consolidating. If we break below this low here, this would indicate a break in market structure. So I'd like to see that, a break below here. Okay, so a break below there and then get a retest of it like that, and then ultimately trade lower like that. So that's the scenario I'd like to see unfold on $CAD. And let me just take a look at an hourly time frame. Oh, and this high right here, I'd like to see this hold. So for further downside expansion, I want to see this high hold. So that's about 50 pips. So yeah, I'd like to see that hold for further weakness. Alright, so if we look at an hourly time frame, as soon as market opened, it immediately traded lower. Now it's trading back up, probably just retesting, an old level of support, now turn resistance, and ultimately wants to trade lower. So if we look at a 15-minute time frame, we can see that a little bit clearer. So right at market open, we formed an ICT bearish order block. Again, we know it's a bearish order block because it's an up candle before a big move down, where the down candles break the up candles. What I mean by break is we just close below the up candles. So now we could just be trading back up in here to retest it and then trade lower. Again, I don't take any trades mainly on Sunday or Monday. I wait for that to unfold to get a clearer read on price for Tuesday, Wednesday, Thursday. So I think that's it, guys. Yeah, so just keep an eye out for these things that I mentioned. Again, if you're not in the Telegram group, it'll be in the link in the description. Just click there. It's free to join. And basically, I'll just send you guys like little tips that I see in the markets, any trades that I'm looking at, signals, things of that nature. So it's not just a signal group, but I do send like educational stuff in there as well. So it's kind of both. You can make money and learn while you're making money. So it works hand in hand. Aside from that, thank you so much for watching this video. Make sure to hit that little thumbs up button right below the video as well. That'll help push this video to other traders out there and help grow this community. Thanks, guys. Have a good one.